Fiscal 2018 was a strong year for Greenbrier. Growth and operational success positioned the company well for continued progress in fiscal 2019. Greenbrier continues to advance a four-pillar strategy to 1. Grow and maintain its core North American markets. 2. Expand in international railcar markets. 3. Extend its talent base through a robust talent pipeline. And 4. Deploy capital efficiently to grow at scale in new and existing markets. Earning performance in fiscal 2018 was the company's third best in its history. Net earnings were $151.8 million, or $4.68 per diluted share on revenue of $2.5 billion. This performance allowed Greenbrier's board of directors to return capital to shareholders through quarterly dividends equal to nearly $1 per share on an annualized basis. Greenbrier ended the year with a robust balance sheet, ample liquidity, and no net debt. Manufacturing celebrated milestones at its facilities in Europe and Latin America in 2018. The company's Polish facility, its first in Europe, marked 20 years under Greenbrier ownership. In Mexico, manufacturing celebrated the 20th anniversary of operations and the 10th anniversary of GIMSA, its highly successful joint venture in Monclova. Greenbrier Maxion in Brazil, one of our newest ventures, celebrated the facility's 75th year of operation. It is the leading railcar manufacturer in South America, producing over 70% of new railcars in Brazil. Gunderson, Greenbrier's flagship manufacturing facility since 1985, located in Portland, Oregon, will celebrate 100 years of continuous operation in 2019. The facility continues to leverage its maritime roots by producing large ocean-going barges alongside its railcar production lines. Today, Greenbrier is an international organization with commercial and new railcar manufacturing operations on 4 continents. Greenbrier is firmly established as the second largest railcar manufacturer in North America and the largest railcar builder in Europe and South America. In 2018, we delivered 20,900 railcars and entered 2019 with a railcar backlog of 27,400 units, valued at $2.7 billion. Greenbrier has an active leasing company and a unique asset management services business that are both growing rapidly, constituting a distinct competitive advantage for the company and its customers. In fiscal 2018, Greenbrier renewed or remarketed leases for more than 5,000 railcars. By the end of August 2018, lease fleet utilization improved to 94%. Greenbrier's railcar leasing syndication platform provides access to competitive cost of capital, which creates value across the enterprise. Greenbrier Management Services now touches nearly 25% of the operating North American fleet. Wheels, repair, and parts is a key segment of Greenbrier's integrated business model. Customers depend on our high-quality aftermarket products to support their rolling stock investments. The financial performance of Wheels, repair, and parts grew year over year in fiscal 2018, reflecting greater operating efficiency and stronger market activity. For the first time, about 30% of orders and 25% of deliveries were outside North America, another major achievement in the company's international diversification. Railcar deliveries in Brazil have reached their highest levels since 2016. Europe's backlog is strong heading into 2019. The integration of AstraRail continues through operational improvements at the company's Romanian plants that are expected to boost overall profitability. In Saudi Arabia, Greenbrier continues to assist the Saudi Railway Company, or SAR, in maximizing their rail network, including the creation of strategic new rail routes. Greenbrier and SAR have agreed to pursue both public and private investments, totaling almost 1 billion Saudi riyal, or nearly $270 million US. This partnership provides strong footing in the kingdom's emerging rail industry. Strategic growth in Eurasia and the Middle East continued with the acquisition of a majority interest in Rivag, a Turkish railcar builder and repair services provider. Turkey occupies a key freight transit route connecting Europe and Asia, where rail growth is expected as trade accelerates. Fiscal 2018 was a year of growth and operational success. Greenbrier continued to execute on our strategy of enhancing core markets in North America while growing and diversifying our international footprint. Greenbrier expects to exceed the $3 billion mark in total revenue for the first time in 2019. A leader in the international railcar sector, Greenbrier looks ahead to the continued opportunities freight rail can deliver to growing economies throughout the world.